Welcome to the Nifty Noon Podcast. This week we're doing a deep dive into the crypto market, specifically looking at the key trends, events, and developments we saw unfold from June 9th through June 13th. Our mission, really, is to pull the most important insights from our newsletter to give you a shortcut to understanding what actually mattered.
And it truly was a fascinating week. Looking back, it was a period that underscored surprising market resilience for certain assets, particularly Bitcoin, even as we saw, significant moves towards greater institutional and mainstream adoption across the board. We're going to unpack how the market navigated some external pressures and spotlight what major players were actually doing.
Okay, let's get into it then, starting with Sunday, June 9th. Right out of the gate, we were tracking some, high-profile political drama. It was that public feud between President Donald Trump and Elon Musk.
That's right. And this back and forth, which included talk of canceling government contracts, well, it had a swift and pretty clear impact on Dogecoin, D-O-G-E. We saw its price slide over 20% during the week. It really seemed to react directly to Musk's public statements and his official departure from the Department of Government Efficiency, DOGE, right?
Yeah, the acronym didn't help, I guess. It highlights how sensitive some assets can be to individual figures. But what was particularly striking, and something we highlighted in our newsletter, was the sharp contrast with Bitcoin's performance that same day.
Absolutely. While DOGE took that hit, Bitcoin held remarkably firm, staying above $105,000. It appeared largely unfazed by the kind of political theatrics that might send ripples through traditional markets. And this is where it gets really interesting, I think, because it speaks to a potential shift in how Bitcoin is perceived.
Right. It kind of reinforces this emerging narrative that we've been tracking for a bit.
Yes, exactly. The idea that investors might increasingly view Bitcoin less as a purely speculative asset, susceptible to personality clashes or political squabbles, and more as potentially a hedge against institutional instability or partisan conflict. It suggests Bitcoin is continuing to mature as an asset class, maybe becoming more insulated from the whims of powerful individuals.
And adding significant weight to that maturation narrative were the concrete signs of institutional and corporate interest in Bitcoin that we noted in our newsletter on June 9th. Real money moves.
There were several big ones that week. We saw Trump Media announce its plan to raise up to $12 billion, specifically with the intent to buy Bitcoin. Now, putting aside any political considerations, that's a massive stated capital allocation goal from a major media company directly targeting Bitcoin.
Huge. And it wasn't just a U.S. phenomenon either, right? We also noted Metaplanet in Japan launching Asia's largest ever equity raise explicitly dedicated to Bitcoin acquisition.
Plus, Michael Saylor's strategy, formerly MicroStrategy, they just doubled down on that infinite bid strategy. We saw them not only upsize their Stride perpetual preferred stock offering from $250 million way up to $1 billion, but also acquire another 1,045 BTC for about $110.2 million, averaging around $105,426 per Bitcoin.
It's just a clear continuation of their aggressive long-term accumulation strategy. It basically creates this consistent buying pressure, almost regardless of market dips.
Exactly. Saylor sticking to his guns.
And we even saw legislative action related to Bitcoin that week. Congressman Tim Burchett introduced a House bill aimed at codifying President Trump's strategic Bitcoin reserve executive order. Again, just reporting this factually, it shows Bitcoin is entering these, serious discussions within the political structure itself.
Just a brief side note on the week's market reactions. Our newsletter also caught the launch of those America Party meme coins tied directly to some of Elon Musk's posts. It's kind of a quirky reminder that alongside the serious institutional moves, the market can still be influenced by internet culture and, rapid-fire speculation.
Right. Never a dull moment. Okay, moving on to Monday, June 10th. The conversation shifted a bit. There was a lot of buzz around whether we might be seeing echoes of the initial coin offering, the ICO trend, from back in 2017.
Yeah, this was really sparked by the activity surrounding Plasma. That's a new network aiming to bring a Bitcoin-backed stablecoin to market. And we saw it attract an incredible $500 million in stablecoin deposits within minutes for its upcoming token sale. Minutes.
$500 million in minutes. That's just eye-popping demand. And our newsletter highlighted a detail that really underscored the intensity, didn't it?
It did. It noted that one trader reportedly spent $100,000 just in Ethereum priority fees, gas fees, just to ensure their $10 million USDC deposit made it through before the sale closed.
Wow, that level of urgency, that willingness to pay huge fees, it certainly feels reminiscent of the frenzy we saw in the 2017 ICO boom.
Definitely. And the token sale itself was only for $50 million worth of tokens. So, I mean, it was instantly 10 times oversubscribed just based on those initial deposits. Huge demand.
So what's Plasma trying to do technically?
Well, its goal is to enhance stablecoin utility on Bitcoin by creating an EVM-compatible sidechain. Now, EVM-compatible basically means it's designed to work with the tools and smart contracts from the Ethereum ecosystem, the Ethereum virtual machine. The aim here is to allow for things like zero-fee USDT transactions, but running on the Bitcoin network.
Okay.
And this overwhelming demand for the token sale really does connect to a broader investor appetite for stablecoins right now, especially, coming off the recent successful public listing of Circle, the stablecoin issuer.
And Circle itself made news that week too, expanding its USDC stablecoin onto the XRP ledger.
Right. The XRP ledger is known for fast, low-cost transactions, so integrating a major stablecoin like USDC there could definitely open up new use cases.
We also saw other significant stablecoin and digital asset integration news highlighted in our updates that day. Hong Kong and Australia exploring using Chainlink for secure exchange of CBDCs and stablecoins.
And tokenized U.S. treasuries actually went live on the XRP ledger as well. And even the DTCC, which, is the main clearinghouse for the U.S. stock market, is exploring issuing its own stablecoin, pending legislative clarity. These are all signals of digital assets pushing into traditional finance infrastructure. Big moves.
And on the regulatory front that day, our newsletter included a notable comment from SEC Chair Paul Atkins at a DeFi roundtable. He apparently suggested that DeFi is winning the regulatory argument.
Yeah, that's an interesting turn of phrase from someone in that position, isn't it? It potentially signals an acknowledgement of DeFi's increasing importance and maybe, just maybe, a shift in regulatory thinking, or at least the conversation around it.
Food for thought there. Okay, now moving on to Tuesday, June 11th. This is where Ethereum truly took center stage. We saw a pretty significant upswing in ETH's price, breaking past $2,700 and actually peaking during the week at $2,803, according to our data.
And this wasn't just random price action. Our analysis in the newsletter identified some key drivers really propelling this momentum. Firstly, we've seen weeks of consistent net inflows into the spot Ethereum ETFs in the United States since they launched. That's a strong signal of growing institutional interest and what we termed a sentiment shift towards ETH as, a legitimate investment vehicle.
Right. Plus, there was a noticeable surge in network activity, particularly on Layer 2 scaling solutions built on top of Ethereum. They saw impressive decentralized exchange, or DX, volumes.
EXs being those crypto trading platforms without a central authority. And Ethereum continues to hold a commanding 61% market share in total value lock, TVL. That's the total value locked up in its ecosystem, a key health metric.
But one of the most significant reasons cited in our newsletter for short-term bullishness was the launch of Sharplink Gaming, ticker SexyBBedPayT. This is an initiative chaired by Joseph Lubin.
The Joseph Lubin, yeah. A very prominent figure in the Ethereum space, co-founder of Consensus.
And Sharplink Gaming completed a $425 million private placement led by Consensus itself. That's pretty major.
Exactly. And the potential implication discussed in our analysis was that Lubin's initiative could create a sort of infinite bid effect, kind of like what Michael Saylor's strategy has done for Bitcoin. Saylor's strategy is essentially using corporate capital to constantly buy BTC. So if Sharplink Gaming is directing a significant amount of this raised capital towards Ethereum or its ecosystem assets, well, it could consolidate substantial funds and create a consistent buying pressure for ETH or ETH-related tokens, potentially mirroring strategy's positive price impact on BTC. That's the theory anyway.
Interesting parallel. We also saw some incremental progress towards potential Solana ETFs that week, didn't we? The SEC requested amended S1 forms from prospective issuers.
Yep. An S1 form is that initial registration statement needed for public offerings, so it's a necessary, albeit early, step towards potential approval down the line.
And we noted some positive legislative movement with the Clarity Act passing in both the House Agriculture Committee and the U.S. Senate with strong bipartisan support.
Yeah, while it's complex, this bill is seen by some as a step towards providing more regulatory certainty for certain digital assets. So movement on the Hill, too.
Okay, examining Wednesday, June 12th. We focus on a key development for crypto infrastructure and, really importantly, user adoption. global payments processor Stripe made news by acquiring Privy.
Right. Privy is a developer specializing in cryptocurrency wallet infrastructure. And we highlighted this in our newsletter as a highly strategic move. It's about significantly lowering the barrier to entry for Web3 applications.
And why is lowering that barrier so important? Remind us.
Well, I mean, think about it from a new user's perspective, right? Getting into crypto often requires downloading a separate wallet app, managing seed phrases, understanding network fees. It can be clunky and frankly intimidating for a lot of people. Privy helps by creating embedded wallets directly within apps and websites. So users don't need to leave the app they're using or set up something entirely external. It simplifies user onboarding dramatically. It's a major step, potentially, for improving user experience in the industry.
Makes sense. And this acquisition follows Stripe's relatively recent re-entry into the crypto space, right? With the rollout of USDC stablecoin payments for merchants.
Exactly. It's clear they're building serious infrastructure to integrate digital assets into their core business. They're not just dipping their toes in.
We also covered some interesting AI and crypto integration strategies highlighted that day. Synaptogenics unveiled a crypto treasury strategy centered on Bittencer's TAL token.
Which is focused on decentralized machine learning. And TRNR secured $500 million to buy Fethy tokens, Fetcha.ai's token, for their own AI-focused crypto treasury strategy. Shows specific sectors adopting these strategies.
Now, this day also served as a stark reminder of the market's sensitivity to external shocks. We noted in our updates that $335 million was liquidated from the crypto market in just 60 minutes.
Yeah, that followed the news of Israel launching strikes on Iran.
So despite all the signs of maturation and institutional interest we've been discussing, this shows the market remains highly reactive to major global geopolitical events.
It's a sober reminder, absolutely. While crypto is maturing, it's still very much connected to the wider world. You can't disconnect it entirely.
Okay, concluding the week with Thursday, June 13th. The focus was heavily on significant product announcements from Coinbase at its State of Crypto Summit 2025.
Yeah, our newsletter framed these announcements as a major push by Coinbase to expand its ecosystem and integrate crypto much more deeply into everyday life. The clear aim here seems to be onboarding the next wave of users by making crypto more accessible and, crucially, more useful.
They unveiled several products aimed at different user segments. One was the new Coinbase One card, a partnership with American Express.
Yes, this allows Coinbase One members to earn up to 4% back in Bitcoin on everyday purchases. They also introduced a new, more affordable basic tier for Coinbase One membership, making those rewards more accessible to a broader user base. It's a direct bridge between traditional spending and crypto rewards.
And a huge move for e-commerce was their partnership with Shopify. That seemed big.
Definitely. That partnership enables millions of Shopify merchants to accept USDC payments directly on the Base network, which is Coinbase's own Layer 2 blockchain. And customers using USDC for payment will also receive 1% cash back. So this directly integrates stablecoin payments into one of the world's largest e-commerce platforms. That's significant reach.
And for businesses, they unveiled Coinbase Business. What's that about?
This is positioned as an all-in-one financial platform specifically for startups and small businesses. It allows them to manage crypto assets, facilitate payments using crypto, and even earn yield on their USDC holdings. It's a direct play to get businesses using crypto in their day-to-day operations.
Okay, trying to capture that market too. Finally, they announced that native decentralized exchange, DEX, trading, will soon be available directly within the main Coinbase app itself.
Yeah, this is pretty significant because it means users will be able to trade thousands of altcoins available on the Base network almost instantly, without needing to navigate separate DEX interfaces or transfer funds off the main Coinbase platform. It significantly lowers the technical barrier to accessing a much wider universe of crypto assets beyond just the major ones listed on the main exchange. Makes DeFi a bit easier, potentially.
So collectively, these moves really represent Coinbase's ambitious expansion strategy, right? Aiming to capture users across retail spending, e-commerce, and business operations. This could really increase crypto's practical utility and maybe drive wider adoption.
That seems to be the goal. And speaking of bridging digital assets into traditional programs, our briefing also noted Pudgy Penguins, the NFT project, partnering with Lufthansa's Miles and More program.
Right, another example of how digital assets are finding ways into established loyalty and reward systems. Interesting crossover.
Yeah, definitely.
Okay, looking back at the weekly market performance and some other notes from our newsletter briefing, as of the end of the week, Thursday, June 13th, we saw Bitcoin trading around $104,879. Ethereum at about $2,529. Solana around $145. And Polygon roughly $0.20.
Yeah, and it's worth noting, as our stats show, that these prices were slightly down from their peaks earlier in the week. Bitcoin had pushed above $109,000, Ethereum over $2,800, Solana past $166, and Polygon over WeMonth 22 cents. So there was some price consolidation after those midweek rallies.
Fair point. On the NFT front, our weekly overview showed CryptoPunks continuing to dominate top sales. One notable sale was hashtag 50051 for, what, 71.80 ETH?
Uh-huh. And we also saw some interesting volume fluctuations on major platforms like Blur and OpenSea, the usual ebb and flow.
And our daily winner and loser lists featured familiar names from different corners of the NFT space. Projects like Bitcoin Puppets and Node Monks, those Bitcoin ordinals, frequently appeared as winners.
Right, alongside Ethereum-based projects like Milady Maker and Tensorians. And on the flip side, we saw projects like Quantum Cats, another ordinal project, and Captains sometimes among the daily losers. It's a mixed bag, as always.
Just a couple of other interesting notes from the week's briefing before we wrap up. We saw Connecticut pass a law banning state investment in Bitcoin, which just shows the varied, sometimes conflicting state-level approaches to digital assets in the U.S.
Yeah, patchwork regulation continues. And we noted the launch of Stable, a new Layer 1 blockchain like a foundational network where USDT stablecoin is used as the native gas token, meaning peer-to-peer transfers are free. It's an interesting experiment in stablecoin native network design.
Definitely one to watch. Well, so let's bring this all back to you, the listener, and why these developments actually matter. This week's activity, the kind of stuff we dig into daily in our newsletter, it really shows crypto continuing its relentless push into mainstream finance and everyday use.
Absolutely. We're seeing it happen through stablecoins being used in payments, these major integrations with giants like Stripe and that Coinbase Shopify partnership, and increasingly sophisticated institutional strategies from companies like Strategy and, well, Trump Media making large capital commitments, stated or actual.
Right. It also highlights this ongoing tension, doesn't it, between this undeniable maturation, this increasing integration and building resilience, and the persistent sensitivity to external political or geopolitical volatility. We saw that clearly on June 12th.
Yeah. It's a market that's growing up, for sure, but still has moments where it reacts sharply, sometimes very sharply, to the world around it.
So this deep dive into our sources from June 9th to 13th paints a picture of a market that's definitely not standing still. It's attracting major players, it's building critical infrastructure for wider use, and it's constantly testing its resilience against external pressures.
Indeed. Which brings us to a final, maybe provocative thought for you to consider. With major companies like Trump Media and Strategy investing heavily in Bitcoin, significant inflows into ETFs signaling institutional adoption, and payments giants like Stripe and Coinbase building critical infrastructure for mainstream adoption and stablecoin use, is the crypto market fundamentally changing how traditional finance and everyday commerce will operate? Or are these still early, perhaps fragile steps in a journey that's still full of regulatory and market uncertainty?
Something to mull over as you look at the market this week. Thank you for joining us for this deep dive into the week's key developments.
We hope these insights from our newsletter help you stay well-informed in this very fast-moving space. You can learn more and keep up with all these developments by subscribing to our newsletter at niftynoon.com.
Thanks again for listening.